everything had gone out of control. The question is to what degree the oil infrastructure in Russia will be impacted. We have seen bombardment of an oil tank, but that's it, right? So there was not more than that. But always when you have a change of guards, whoever wants to control power has to control oil supply and infrastructure. So from that point of view, we have seen that not happening.
In terms of the broader picture about Russia and its supply at the moment, I can't help thinking that pretty much everyone's probably pretty happy where it is at the moment. The Russians are happy that they've got a client in India and the rest of Asia where they can offload oil, albeit at a cheaper price. The customers are happy with that cheaper price. The Americans are happy that despite the fact that they're talking tough on sanctions on Russian product, the fact is there is a buyer for it, which means we haven't got a supply squeeze globally, which is going to ruin the US economy. Or am I wrong? Is actually anyone out there really, really unhappy about the level of supply of Russian product onto the market? And dare I say it, I know the Russians won't like the price, but at least they're getting it away.
Well, Steve, that was incredible how the Americans have done that last year. I mean, remember in June last year, the European Union imposed sanctions, oil sanctions on Russia. If they had held those sanctions up, it would have been very difficult to get oil out of Russia. So it was really only Janet Yellen with the price cap that basically made it technically possible that this supply is still flowing and is doing what it's supposed to do, namely to reduce the income to some degree of Russia. But what Europeans have forgotten in their initial euphoria is that taking Russia out of the supply equation would have created enormous increases in prices and would have been a hardship for many of the developing countries in the world. So the US were much smarter. They understood that, and they are now directing the oil to other places away from Europe. And Russia is happy because they still get the income. The prices are far higher than what they need. China and India extremely happy because both of them are having nice discounts. Europe can still survive. Remember, Europe is a big importer of diesel. All that diesel goes now via Turkey and via Saudi Arabia and the UAE and comes back into Europe. The premium that diesel is facing above crude oil now is increasing again, but it's not as dramatic as a year ago.
Johannes, I'm just reading a terrific article in the Wall Street Journal about WTI and how it's the most significant commodity contract on the planet. That's been the description used, sort of pointing out that at the time it was launched, other big events happened. Thriller album by Michael Jackson, Nintendo's game console, but saying that this has been so pivotal as you take a look at world events, the war that we've seen over the years in the Middle East and how this has responded, how OPEC has become quite key in terms of setting direction on supply and demand. But if you look at the price action now on WTI, we have narrowed the range in recent months. What is that telling us about the way the geopolitics and the latest situation, even over the weekend, has been interpreted by oil markets?
Well, I mean, first of all, TI is certainly right now much more a focus point because it is becoming U.S. crude oil has going to Europe in a much bigger extent as a consequence of the Russian events. Russian oil not going to Europe means much more U.S. oil goes into Europe, so that became relevant. The second about the absolute level of oil prices right now. A lot of people would have anticipated oil prices going higher. You have heard Daniel Jürgen before, but this is because he would have assumed that oil sanctions were much more dramatic in their impact. Now, because of the smart workaround of Janet Yellen, oil prices have moderated, and that means basically that this hike that you would expect because of the sanctions is not happening. Now, if you had spoken earlier, 2 years ago, earlier. Oil prices, around $50 in their actual costs. When they're at $70, everyone is happy. It's a great time. But if you look on the other side of it, if you talk about net zero emission, and you hear the IEA saying, well, don't invest in oil and gas, then this is still relatively low.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.